Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me to another eventful week of economic data. Viewing the Australian dollar, it still currently maintains a positive sentiment as the market bulls gear up and prepare for the next challenge that is towards the upside. A break of 66.25 would give further scope on towards the region of 66.80.90 and with the call still holding at 67.45 to the bullish case. Any pullback defends the level around 65.45.50 with beneath the 60-day moving average seen around 65.40. Although weakness has been quite persistent given the bearish divergence, I still feel the market bulls are capable of taking this market higher, so any weakness should be brief. The euro dollar, however, saw modest gains, holding above the 107 area for another week, and still expecting to see further gains on towards the region, that is, of 108.2025. A break there would give further scope on towards 109 to 110. As traders prepare for another crucial week of economic data, the US focus is on the inflation data, mainly the April Consumer Price Index and also the PPI. The report could give significantly influence market sentiment and investments decision, particularly prompting the Federal Reserve to consider rate adjustments earlier than expected, with a rate cut call from September now shifting potentially to July. Forecasters anticipate the CPI may come in around 3.4% compared to the previous month of 3.5%. Also this week we've got Fed Chair Powell speaking in Netherlands at the Foreign Bankers Association in Amsterdam, where audience questions are expected, therefore may produce some whipsaw price action in the markets. So keep an eye on the euro. As I mentioned, the US dollar did post an outside range trade to the bearish case, so this could influence further weaker play to the greenback and a stronger play to some of the markets. The bullish determination for dollar yen carries into this week. However, the market still may find a significant downturn as the risk could see a potential intervention from the Bank of Japan. After previous whipsaw price action, there was speculation of an intervention. Nevertheless, I still feel the market has and may still fall back towards the region of 151.5 to 150.5. But that being said, I have little view when it comes to the top side, given the fact that the caution and the whipsaw price action could see a significant downturn as mentioned. The engulfing candle is expected to produce further bullish gains and look towards the region of 126.5 or onto 126.60, with any pullback likely to be shallow. Spot gold extended gains on Friday, benefiting from Thursday's weaker US labour market. Along with that, some safe haven demand came in due to the geopolitical tension in the Middle East. I don't have a view on the top side as the market has failed many times as we approach this level around 2,370 and could see another downturn and look towards 2,300 or maybe to 2,250. Still feel this market's a little bit overcooked since this bullish trend began around $2,000 a barrel and for most of this year has now peaked around 2,400. So pull back to 2,250, then reassess. Wrapping up with oil, we've got an engulfing candle, and due to the fact we're back through this trend line, which was once resistance and then support, has now opened way back towards $75 a barrel and reassess from there. Any upside attempts, I view the resistance around 80.20.25 as a potential cap. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new week.